How you doing, Discover Your Options students? Today we're going to talk about options. What is an option? Options is a type of derivative security, basically meaning the option derives its price from something else. In this case, the option derives its price from a stock from a publicly traded company. And there are many different components that make up the option. You have the option itself. You have the type of option, maybe a call or a put or a straddle. You have the strike price. You have the expiration date. You have option chains, which breaks down into the bid, the ask, volume, open interest. And we're going to explain each and every last one of those things. But today, we're going to focus on simply what is an option. So on your screen, if you look, this is an excerpt from the guide that each and every last one of you will receive as being a part of the Discover Your Option Bootcamp. You can see they're numbered, and you have things like options, call option, put option, the option contract. Go over to the right, you have option chain, bullish, bearish. Those are two terms that you will hear in the financial markets. Exit strategy. These are key terms that we wanted all of our students to really focus on. But today we're going to just focus on the first one, which is an option. So it reads, an option gives an investor the opportunity to control 100 shares of a particular stock during a selected period of time. So with that first sentence is saying that one option contract equals 100 shares of a publicly traded company. Whichever publicly traded company you decide to run your option on, you're actually controlling 100 shares of that company stock. So it's giving you the opportunity to control 100 shares of a particular stock during a selected time period. So this is where your expiration dates come in, because as you'll learn in the boot camp, we're going to have a date where we purchase the contract and then a date where we expect to sell the contract. Within that time period, we have the right but not the obligation to buy or sell that contract. So let me back up in case I explained that a little too fast. So one option contract equals 100 shares. And during the life of our contract, we have the right, which means we can or cannot, but we're not obligated. So nobody's forcing us to have to buy all 100 shares. We're just controlling them for a reduced premium rate. So the option contract that we purchase equals 100 shares. 100 shares. So that means when we break down into the option chain, if that premium is $1 per share, that option contract actually costs $100 because one contract equals 100 shares. Now, the same applies when we sell that contract. If we bought it for $100 and we sell it where it's going to say $2, which we know is $2 per share, and one contract equals 100 shares, then we know we're going to make $200 on the sale end of that contract. That's the basic, without all the technical jargon, of what an option is, guys. It's just your ability to control 100 shares at a selected price for a selected time with no obligation to actually have to purchase all 100 shares. So we'll break down to the different types of options. We'll break down the option chain. But for today, I really just wanted to focus on what is an option. And it's just giving the investor, you or me, the opportunity to control 100 shares of a particular stock during a selected period of time. During this period, they are not obligated to buy or sell said stock of the company that you chose. And if you'll see when we go down to the next page on here where it breaks down what kind of options are available. So we will get into each and every component of an option. But again, we just want to hit you with the simple, basic, what is options? What are we doing? We're going in and we're going to control 100 shares of a company with the idea of purchasing it low and in a selected time period, selling it high. That's the basic rundown of the option. Thank you. Have a blessed day.